Hello everybody, Mike Prey with Keller Realty here with a March 2025 update. I've had a lot of questions. We got a lot of things going on right now in the news and in government and in the economy. And I've had a lot of people ask me, well, how will these tariffs potentially affect my real estate and the real estate market in general? And a word that I have to describe that is really uncertainty. It's interesting as you dig into these things, the tariffs will affect one way or the other real estate through interest rates and affordability primarily. And interestingly enough, the real estate markets, not real estate markets, but stocks and bonds, the securities markets are often very much decided by investor behavior. And when I say investor behavior, I mean it doesn't always have to be tied to a direct actual occurrence, but the perception of the occurrence, the projection of what's going to happen, and the reaction to the information that investors exhibit. And so a lot of times, so what we've seen with this since April 2nd is we've seen the stock market actually before April 2nd, just with the idea that this was going to happen, that tariffs were going to be imposed. We've seen the stock market drop quite a bit. And so even before the tariffs were put in place, or even before we've really seen what the reaction is going to be of the rest of the world. And it's not my intention to make a political commentary here, and hopefully I don't stray into that. Whether or not tariffs are a good idea is not the purpose of this. But so some things that we have seen happen because of investor perception. Actually, stocks have dropped. People have pulled their money out of the stock market. A lot of people have pulled their money out of the stock market, and they put money into the bond market. And that typically results in interest rates going down. So interest rates have gone down a little bit, not a ton, but they've gone down a little bit, which is good for the real estate market. Interest rates have been showing some stability here for the last 3 or 4 months, and which is always a good thing for the real estate market. But they've dropped just a little bit because of investor behavior in the markets. The other, I guess, factor that we need to consider is going to be affordability. And so there's an index, a housing affordability index, which takes a look at median sales prices, it takes a look at median income, and it takes a look at current mortgage rates, and then you put all of that together, and the question is, can a family making the median income afford a house with the current interest rates that is at the median sales price? And right now, at this point in time, that affordability is just right on par and maybe a little above. So that means that family or that individual has plenty of money to buy a house and to be able to afford a house. And the higher above the median on that, which is 100, the higher above 100 that goes, the more affordable houses are. And so right now that's just right on par. The other factor of affordability, though, is going to be tied to tariffs a little bit, and that's going to be the Consumer Price Index, which measures the prices of goods and services and whether the actual prices are going up and down, what they are. So as of the end of March, the Consumer Price Index was showing that increases in goods and services is slowing. and actual energy prices have gone down. Food prices, we've seen some things go down at the grocery store. The interesting kind of figure to me is that actual goods and services, not counting gas or fuel and not counting food, the actual goods, the things that you can buy and hold in your hand, those have started to go down. But services are not going down as fast. They're still, they're still above that line. So that was a curious thing to me. But things that you're going to go out and buy and pick up, generally those prices are trending down. Some of the services are slowing, but they're increased a little bit. The actual fuel prices have gone down. Energy prices have gone down. So those are good, but it's a mixed bag. And so it remains to be seen how the prices of those things are going to be affected by tariffs. So the fear of the investors is that tariffs are going to cause inflation. And so the costs of goods will go up, which will impact percentage of income available for housing. It may reduce interest rates, however, which will mitigate that somewhat, and it may increase the cost of living. So it remains to be seen, is the moral to that story. The administration who's imposing the tariffs have indicated that this is a long-term economic strategy to make our economy stronger and, create new jobs, which will, put more buyers and sellers out there in the market, which is always good for real estate. And the proposal is to actually bring these other countries to the table to negotiate a better trade agreement individually as we go along. And so there's been some early mixed success with that. And so we'll just have to watch and see exactly how things go. But right now, what's happened is that the homes closed in March was down 3% over February. For the year, it was down 3%. So the number of homes that actually closed, which really reflects activity in February. We've seen a trend downward for a long time in that, the number of homes sold, the number of homes closed. So that's just continuing that trend. Interest rates are a huge factor in that, and some of the affordability with the inflation, the cost of goods and services. So, hopefully we can see, some of that continue to trend downward. The median sales price was down 11.11% at $320,000 between February and March. We've also seen a trend over the last 3 months of that number dropping, the median sales price. And that can be due to a lot of factors. Some of it is that prices overall may be going down a little bit for houses. Also, it depends on the categories of homes that are selling at any given time. Remember, the median is the midpoint between the lowest priced home and the highest priced home. And so it's not really an average. It's the midpoint. So if a lot more lower priced homes sold than higher priced luxury homes, then you're going to see that median sales price go down. So it can be a combination of all of those factors, but there is probably some price reduction going on. For the year, it's down 20%. This time last year, the median sales price was at $400,000. Days on market, the market is starting to pick up. It was down 13 days at 49 days for the month. For the year, it was up about 5 days, so it was at 44 days this time last year. The months of inventory is flat. Months of inventory is how long it would take to sell all the inventory currently available if we didn't put any more homes on the market at the current rate of sales. And that was flat month over month. It was up about 1.15 for the year, which means that there's more inventory out there available on the market. Showings was up 85% from February to March. That means that people are, that part of that seasonal, but that's pretty huge anyway. It was kind of exceptionally low in February, and then it's popped up again in March. So there are people getting out there, getting on the market, and looking to buy a home. So that's very encouraging. For the year, it was the showings were up about 17.13%, which means that is something that is trending upward even from last year. So there are more people wanting to buy homes. I think a lot of that is because of the changes in the interest rate. I think it appears that people are getting used to the idea that we're not going to have 3% interest rate again, and that we have been very stable with the interest rates over the last few months, which is a good sign. That gives people an opportunity to be more confident and to plan and to get out there and buy their homes. It also makes sellers more comfortable that they know what to expect for their next home, as well as feeling confident that they can employ strategies to help people get into their own home. So the interest rates ended the month of March at 6.65% for a 30-year fixed conventional. For the year, they were, which is down about 11 tenths from February, down 14 tenths from this time last year at 6.79%. So the actual current climate for real estate is almost a neutral market. I wouldn't say it's overwhelmingly a seller's market or overwhelmingly a buyer's market. It's more of a balanced market, and that's usually a good sign. Once again, there is some uncertainty as to how the perception of what the administration is doing with tariffs and the reality of what's going to happen with that. Uncertainty always creates a little volatility in the market. But right now, things are good for buying, things are good for selling. If you have questions about what you should do and what your values are in your neighborhood or potential sales prices, and what kind of strategy you should employ for your real estate goals, please give me a call at 469-446-0234, and we can discuss that. You can email me at mikepray2@gmail.com. Message me on social media if you're seeing it there, and I look forward to helping you navigate these little bit of uncertain times with a little bit of a foundation of some good circumstances for real estate buying and selling. Once again, I'm Mike Pray. Look forward to talking to you again next month and hearing from you in the meantime if there's any way I can help. Thanks a lot. Bye.